What's up, everybody? This is Jimmy with Trading Decoded. It is December 18th, 2024, and I guess the Santa rally is canceled for today anyway. Just your standard issue $20 drop today. Yeah. So the market started out with a lot more movement than you normally see on an FOMC day before 2 o'clock, which was nice. It was a little slow going in the morning. Contract prices were extremely high, as they always are on FOMC days. And they weren't moving much because at the very beginning of the day, specifically at open, you're paying a premium just because IV is spiked at the open, and then it quickly started to drop off. So a move that we found to take near the open didn't pay nearly the amount of money that we would normally expect on a 50-cent drop, which is what we got. It still ended up being a winning trade, but not by much. We're talking less than 10% for most people who took the trade. Winning, yes, not the amount that you normally be hoping for. And then we found a nice trade to the upside that if you got in and got out, where I did, you still made again. I think that trade was right around, it was 14% for me, but it continued to go up well past the point where I got out. Followed by a move back down, and we'll go over all that. And then we took a break until 155, where the market started to dump like crazy. And then we're obviously, everything's fine. But the reason it dumped, in case you don't know, we got the expected quarter point hike or cut that we were expecting. But what the market doesn't like is surprises. And it got surprised with the fact that they're going to do, or they're planning to do, only 2 rate cuts for 2025 instead of the 4 that they said they wanted to do. And the reason that they're doing that is because they're expecting inflation to actually tick up next year instead of down. So the market is reacting accordingly, but this too shall pass, right? But let's go ahead and get into the chart and see what we saw and what we did. So in the morning, we got some sell-off taking place. Don't really think it was because of the 8:30 reports, because we started to trend down before 8:30, not by much. But, housing came in lighter than expected. Permits were higher than expected, which is usually a good thing. And our trade deficit account balance is the lowest it's been in like 50 years or something like that, meaning we're importing way more than we're exporting. So things are not great on that front, but I don't know that was the cause of this pre-market sell-off. We had all our lines, or at least I have my 3 blue lines, 3 yellow, 3 orange low and 3 orange high. But as we get through them, I add more. And the first trade we took was, mainly for the fact that we were trending down into the open, coming off lower highs along the way on Qs and on SPY. Now this was a little uneasy here at the beginning. So once we saw, we had a call line on the Qs. If we get above 535.65, we would be interested in calls. And if we get below 534.92 on Qs, we're looking for puts. Same thing with SPY. We wanted SPY below this line that it crossed almost 25 minutes before the market opened, and it stayed below it. So I'm sorry, that was our call line for SPY. I take that back. 604.16 was the line we wanted to be below before we take that entry, along with the Qs being below their line. So it was one of those 2-prong situations where we want to see Qs and SPY below a specific level. They both got below that level. That's why the entry was here. So SPY was already below it. We just needed Qs to get below it. And even though we got a 50-cent drop from there, actually a little more, this only returned somewhere between 7 and 10%. And that's, again, because volatility was extremely high in the morning. And yes, in just a couple of minutes, the volatility started to drop off, meaning your contracts were overpriced because of high volatility. And as volatility goes down, even though the trade's going in your favor, it's depleting the value of your contract. So it's just taking money away. So this trade here, albeit on a normal day, would have been a beautiful one. We landed on a support level of Qs and SPY at the same time. So that's the reason we were considering taking profits here. And then we started to put in higher lows on Qs, on SPY. And once SPY got above this, and I believe ADD actually started to trend up as well. Yeah, so ADD was already moving up. And then we recognized early that the Qs was controlling SPY. So that's why we're paying mostly attention to Qs. Started putting in higher lows. Said to everybody, guys, this is an uptrend. We're above an uptrend line. We've taken out the call line on SPY. Qs are trending up as well. If you wanted to wait for the Qs to breach that line, but we were talking about this trade over here when Qs put in another higher low. I said, guys, higher lows, we're more likely to break this resistance than we are to hold support or to hold it as resistance. Now, ironically, and this is one of those nice things when SPY, or even though Qs were struggling to get through, ADD was moving up at these points, allowing SPY to not fall. So for a minute, this was an uncomfortable hold, but SPY continued to move up. We were aiming for, I had an alert set on this 605.10 line. Why? Because above this resistance here, we were expecting, because originally we were expecting it to go from the call line to the next resistance up here. It had already gotten through that. So our next target up is the next resistance to our left, which was this third yellow line. We got within 5 cents of it on this candle. Some folks stayed in it. I did not. I got out here. No, I didn't. I got out here because I remember hearing the beep and I was begging somebody else who was holding on to the trade with me to get out with me when we heard the beep. So we got out at the beep. I said, F it. We're close enough because it wasn't this candle that gave us the beep. It was the very next one. But this, again, still, this move up was only a 14% win. So we got in, we'll call it 604.50, and we sold out at 605.10. That's a 60 cent move. That would normally be a 30%, give or take, sometimes more, return on our money on a trade like that. So things were moving slowly, but up nonetheless. We followed our rules. We were trending up. We were breaking resistances. We were buying pullbacks to support. Whatever the case was, we played with the momentum. And yes, if you would have held on to it and we stayed above the trend line, you could have made a whole bunch of money on that trade. But that was my second trade of the day and my final one. Not big winners, but winners nonetheless. Then this one here. Why is that arrow green? Because I was asked, Jimmy, if you were looking to get into puts, where would you have gotten into this move down? And it brings to my attention something I want to show you guys, because yes, we're putting in lower highs, but make sure after a move up like that, that you're stacking as many probabilities in your favor or allowing the chart to prove to you that it's worth attempting to take puts after a move up like that. What were we looking for? Number one, first and foremost, we want to get below the trend line. Number two, make sure we break supports. Okay, now we closed below the trend line here barely. We'd closed down here. The next support down is here. So we wanted to see us before me, I would want to get into these puts, is I want to see us get below this support if we were getting in here, right? Meaning if I was waiting to get in at this point, I would want to see this move continue down and break this support. We made a new support instead, which is this double bottom. We pull back, not to the resistance that we came from before. So this is a lower high. We're expecting this support to fail, hoping that it gets down to at least this support. Okay, so again, we're going from here to here. If it gets through that, we're going from there to here, and then so on and so forth until you get to a spot where you've got a lot of room, which in this case, the next support down from here we were aiming for was all the way down here at this yellow line or the pink line, whichever one, right? But nonetheless, lower highs, lower highs, lower highs, Qs and SPY. I think ADD was already moving down. That was the other key to this right here. So we were looking to get into that trade at 1108. Okay, so Qs at 1108 was coming off of lower highs. which is what we want to see. We expect supports to fail, not hold. So if you're getting in aggressively based on the Qs alone, 1108, and ADD at 1108 was printing red as well, pretty aggressively at that time. So everything we'd want to see for an A+ setup was happening. Lower highs on Qs, lower highs on SPY, break of the uptrend on both charts, and ADD printing red. And we breached support. Support was here. So we get in, we're looking for, after we got through several levels of support, ADD was still printing red. We're closing below these lines. You could have gotten out at any one of these levels of support if you felt like it. But the biggest move was yet to come. So here we tried to hold the support. We get through it. Okay, we try to hold support. We close below it. We're looking for the next support down. Well, originally this was it here. We close below it. We move down. Now the next one down is the pink line right here. Okay, it made it to that. It was a pretty comfortable move. I wasn't in it. It was a great trade to the downside. But the point is, all of the things that you would want to see in order to take the risk that is puts was there. So did not take that trade. I was asked, when would I have gotten into this move? I wanted to bring that to your guys' attention in this video. Okay. That's where I would have gotten in if I was going to get into puts after all of those things became true. And then we had a 2 o'clock come, and it just fell and fell, fell and fell and fell, fell some more, and fell and fell and fell, and it's still falling. Epically. Rough day for people who've got into some fresh, longer-term holding positions or any of that. But it'll recover. Just give it some time. But that's pretty much all I got, guys. I don't trade FOMC events, meaning this is not a thing for me. I don't like to do, because some people came back from meetings at work and stuff like that, and they look at the chart shortly after 2 o'clock and said, "Oh my God, what did I miss?" You missed a gambling opportunity that you would have either picked one side and been right or picked one side and been wrong. Okay, there was no way to know that this was going to happen. And then when you try and jump into trades after you get these big moves down, at some point you are going to be catching a falling knife that might be the bottom. In this case, it just continued to dump, even though these pullbacks would have been very uncomfortable. But if you got in way up here, you had nothing to worry about. You could have let this thing run down the whole way and made thousands of % return on your money. You don't see a $20 drop every day in SPY, but today was one of those days. Many people took advantage of it. Many people didn't. I'm one of the ones who didn't, and I don't feel bad about it. But if you made money today, I am super happy for you. I hope you did so with some logic applied behind your trades, other than it's just a lot of red. And hope you traded responsibly. With that said, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. There are links down below. And yeah, I hope you all had a fantastic day. The poll is pretty green in our community today, as it was yesterday. Sorry I didn't make a video. Just didn't feel like it. And that's pretty much it. So you guys enjoy the rest of your day. Till tomorrow, I love you. See you.